Balance sheet. Ano ang naiisip mo sa tuwing naririnig mo ang balance sheet? Nakararamdam ka ba ng kaba, kasiyahan, o excitement sa tuwing naririnig mo ito? What if biglang magpagawa ng balance sheet ang accounting teacher nyo kinabukasan? Alam mo ba kung ano ang balance sheet at kung paano ito gawin?
Ay, oo nga pala. Kailangan ko nga pala mag-aral para sa accounting namin. Nahirapan pa naman akong intindihin tong balance sheet. Well, I have no other choice.
Hi, ang dami pang di nagpapasa ng performance task. Ano kaya gagawin ko sa mga batang yun? Uy, si Mr. Warren ata yun ah.
Bakit kasi kailangan ko mag-aral for this accounting test? Pakahirap.
Having a tough time, Mr. Malazarte.
Uy! Ikaw pala yan, Mr. Torres. Mr. Torres, I'm having a bit trouble with our balance sheet assignment eh. Pwede mo ba akong matulungan?
Of course, Mr. Warren. Saan ka ba nahihirapan?
Well, I'm not quite sure how to format a balance sheet eh. Doon talaga ako pinaka nahihirapan. Di ko talaga siya maintindihan kahit ilang beses ituro.
Then okay, let's start reviewing it. Mr. Warren, let's start by reviewing the purpose of balance sheet. A balance sheet is a financial statement that contains the company's financial position. Sa balance sheet, may kita mo ang asset ng kumpanya, ang liabilities nito, at ang equity.
Thank you, Mr. Torres. Medyo naiintindihan ko na. Pero pwede ka bang maglaan ng extra time para turuan pa ako at matutunan ko pa lahat ng kailangan kong matutunan about balance sheet?
Mr. Warren, estudyante kita dati. Siyempre tutulungan kita. Sige, dito tayo magsimula.
Sorry talaga, Mr. Torres ah. Alam kong nakakaabala na ako sa'yo pero unti-unti ko na naman naiintindihan pero kailangan ko pa talaga ng konting oras. Can you help me out a little more?
Alam ko na gagawin natin para dyan. May papakita ko sa yung video.
Here is everything you need to know about the balance sheet. First off, what is a balance sheet? Balance sheet or statement of financial position is a list of business total assets, liabilities, and shareholders' equity, providing a look into the company's financial position at a specific point in time. It is one of three most important financial statements, along with income statement and the cash flow statement. Balance sheet is broken up into three sections: the assets, liabilities, and the equity, where asset is equal to liabilities plus equity. This equation is very important. As a company's assets grow, its liabilities and equity also tend to grow in order for its financial position to stay in balance. Balance sheets are typically presented in two formats: the account form and the report form. Account form is the financial statement format where the assets are reported on the left side and the liabilities and equity are reported on the right side. The account format is kind of a visual presentation of the accounting equation. Here, the left side is the debit side and the right side is the credit side. Report form presents the assets at the top of the balance sheet. Beneath the assets are the liabilities followed by stockholders' equity. The report format presents all the accounts vertically. Now, let's proceed to the elements. Assets are the items that the company owns or will receive in the future. It has two main types, the current assets and the non-current assets. Current assets are the short-term assets that a company expects to liquidate and spend in 1 year or less. Cash is the amount of actual money a business has at its disposal. Accounts receivable is the money to be received from customers, while the inventory are goods or items of value that a company plans to sell for profit. Prepaid expenses are future expenses that are paid in advance. Now, let's proceed to non-current asset. Non-current assets are assets that a business holds for longer than 12 months. It includes equipment, manual or automated machines used in the business, furniture, assets such as tables, chairs, filing cabinet, and display racks, land, the lot on which building of the business has been constructed, and so on. It also includes intangible assets such as patent, the granting of a property right by a sovereign authority to an inventor, copyright, an exclusive right granted to creators of original works, trademarks, a recognizable sign, design, or expression which identifies products or services of a particular source from those of others. On the other side of the balance sheet, we have liabilities. Liabilities are any kind of financial obligation that a business has to pay at the end of an accounting period to a person or a business. Like assets, it also has two main types, the current liabilities and non-current liabilities. Current liabilities are a company's short-term financial obligations that are due within 1 year. Some examples are accounts payable, amount of money owed by the business to creditors or supplier. Accrued expenses, services or goods you've received that haven't been billed for or paid yet. The salaries expense, salaries already earned by employees but not yet paid by the business. Non-current liabilities are financial obligations that a company has to pay at some point in the future, usually more than a year away. Some examples are mortgage payable, the liability of a property owner to pay a loan that is secured by property. Long-term liabilities, debts a company owes third-party creditors that are payable beyond 12 months. Deferred tax liability, income taxes payable in a future period. Along with liabilities, we have equity. Shareholders' equity is the remaining amount of assets available to shareholders after all liabilities have been paid. It has calculated by subtracting total liabilities from total assets. If equity is positive, the company has enough assets to cover its liabilities. If negative, the company's liabilities exceed its assets. Equity includes owner's capital, the value of cash and other invest in the business by the owner of the business. Drawing, the amount withdrawn by the owner for personal use from the business. So now, let's take a look at a few examples. John received 1,000 pesos cash from a client he did service. Therefore, this transaction will generate a cash in John's balance sheet under current assets. Second example, John had to pay 500,000 pesos for real estate land. This 500,000 will show as land on John's balance sheet under non-current assets. Next example, John buys 20,000 pesos worth of laptop on account. There, this will generate an account payable on John's balance sheet under the current liabilities. Second, John goes to a bank for a long-term loan. The bank gives him 100,000 pesos. This will show as bank loan on John's balance sheet under non-current liabilities. And lastly, after a while, John invested 100,000 pesos in his business. This transaction will show as capital on John's balance sheet under equity. Why is a balance sheet important? The balance sheet is an essential tool used by executives, investors, analysts, and regulators to understand the current financial health of a business. It is generally used alongside the two other types of financial statements, the income statement and the cash flow statement. Balance sheets allow the user to get an at-a-glance view of the assets and liabilities of the company. The balance sheet can help users answer questions such as whether the company has a positive net worth, whether it has enough cash and short-term assets to cover its obligations, and whether the company is highly indebted relative to its peers.
Salamat talaga, Mr. Torres. Napaka-effective nung pinunod mo sa akin. Ngayon, mas naiintindihan ko ng balance sheet.
Walang anuman, Mr. Warren. Teacher ako. Siyempre, responsibility kong tulungan yung mga estudyanteng nahihirapan.
Dahil dyan, sir, tara, kain tayo Jollibee. Lilibre kita.
Sige, tara.